Hello and welcome back to India Business Insights. Today, let us discuss the rise of fintech in India. In recent years, India has witnessed a remarkable transformation in its financial sector with the rise of fintech. This digital revolution has not only disrupted traditional banking but has also prompted the need for comprehensive fintech laws. In this video, we'll explore the rapid evolution of fintech laws in India. Fintech stands as the game changer, reimagining how we handle our money from mobile wallets to online lending platforms. As India marches confidently towards a cashless society, fintech takes the center stage, championing financial inclusion and empowering millions to embrace the formal financial system. The fintech boom isn't a fleeting sensation, it heralds a seismic shift in our monetary affairs. As we journey through this video, we'll delve deeper into the remarkable facets of India's fintech transformation, from the role of government initiatives to the innovations brought forth by startups and the support of financial institutions. The Indian fintech saga is a testament to the power of technology and collaboration in reshaping the financial landscape. Welcome to the world of fintech in India, where innovation meets opportunity and together they shape the future of finance. The fintech boom. The fintech sector in India has experienced remarkable expansion over the past decade, particularly following the widespread availability of internet services in the country. India boasts an impressive fintech adoption rate of 87%, significantly outpacing the global average of 64%. This positions India as one of the most rapidly growing fintech markets on a global scale. Fintech, short for financial technology, encompasses innovative technologies designed to enhance and streamline the provision and utilization of financial services. This broad category spans technological advancements within the financial sector, encompassing retail banking, investment services, and even emerging concepts like decentralized finance, all with the aim of advancing financial literacy and education. Our journey begins with the fintech boom in India. As technology became more accessible, startups and established players saw immense potential in providing financial services through digital platforms. The pandemic has to be an important highlight. It forced the Indian audience to move online. Due to the pandemic, UPI was pushed into the economy. The acceptance of UPI revolutionized digital payments, lending, and credit. The government also played a pivotal role by introducing regulatory measures to adapt to the changing landscape. Financial and digital regulations were implemented to better account for the movement of money within this economy. The Indian fintech sector is in full throttle, showing no signs of hitting the brakes. This remarkable progress is the result of collaboration among financial institutions, startups, government bodies, venture investors, and regulators. Government initiatives have played a significant role in propelling the growth of the fintech industry in India. Jan Dhan Yojana, the world's largest financial inclusion program, has successfully enrolled over 450 million beneficiaries, granting them access to various financial services such as remittances, credit, insurance, and pensions. This initiative has paved the way for fintech companies to develop technology solutions tailored to India's vast consumer base. India Stack, a collection of APIs, serves as a digital infrastructure that enables governments, businesses, startups, and developers to address challenging issues in India's service delivery, striving for a presence-less, paperless, and cashless environment. The India Stack has been a driving force behind the rapid evolution of fintech in the country. The Unified Payments Interface, or UPI, introduced in 2016 by the National Payments Corporation of India, is a sophisticated mobile app based payment system that facilitates fund transfers between bank accounts. UPI has acted as a catalyst for the fintech revolution in India, boasting over 338 registered banks and recording an astounding 6.28 billion transactions worth 10.62 lakh crore in July 2022. The recent launch of India's central bank digital currency or CBDC, known as the digital rupee or E-Rupee, signifies another milestone. This electronic counterpart to physical currency is poised to accelerate the fintech market's growth in India, ushering in a new era of digital financial services. The importance of international law in a globalized fintech landscape. In today's interconnected world, the financial technology or fintech sector operates on a global scale, transcending geographical boundaries. International law plays a crucial role in shaping and regulating this dynamic industry. Here are key reasons highlighting the importance of international law in the globalized fintech landscape. International law is pivotal in the global fintech landscape. Cross border transactions. International law establishes a legal framework for secure cross border financial activities. Key components include Basel III sets global standards for financial institutions, WTO agreements, promotes fair competition in trade finance, and bilateral and multilateral treaties facilitates cross border investment and trade. Number two is fintech compliance. Blockchain and cryptocurrencies, adherence to AML and KYC standards is crucial. Digital wallets ensure data privacy and security, complying with international standards. Regulatory sandboxes encourage innovation while maintaining regulatory oversight. Swift Network plays a vital role in ensuring compliance, security, and efficiency in cross border transactions. These elements collectively maintain the efficiency and security of global financial transactions, fostering international interconnectedness. Then we move on to data protection and privacy. Fintech heavily relies on personal and financial data. Then, data minimization. Organizations should collect only necessary data to minimize exposure risk. Third, data security. Stringent security measures, including encryption and access controls, must protect data from breaches. Data breach notification. Regulations mandate timely reporting of breaches to authorities and affected individuals. Data subject rights. Individuals retain rights to access regulation challenges. Balancing GDPR's strict data handling requirements with fintech innovation can be a security. International law plays a vital role in shaping cybersecurity norms and guidelines for the fintech sector. Key aspects include international conventions. Notable agreements like the Budapest Convention, UNGGE reports, ASEAN Convention, and EU-NIS Directive establish global cybersecurity standards. Now, cross border cooperation. Combating cybercrime across borders involves information sharing, mutual legal assistance treaties, and collaboration with entities like Interpol and Europol. Regulatory frameworks. Protecting financial data and systems is achieved through measures like PCI DSS, guidelines from central banks and regulatory authorities, global standards set by organizations like the Financial Stability Board, and consumer protection regulations. In essence, these components collectively safeguard the fintech and financial sectors from cyber threats, fostering collaboration, global standards, and enhanced cybersecurity practices. Payment and digital currencies. International standards in payment systems, global cryptocurrency, and stablecoin regulation, and the impact of FATF guidelines are pivotal in the world of payments and digital currencies. Key points include ISO 20022, a universal financial messaging standard for efficient cross border payments. Cryptocurrency regulation varies by countries, with ongoing global discussion on effective regulation focusing on consumer protection, AML, and financial system stability. Stablecoins and CBDCs. Stablecoins aim to reduce volatility while central banks explore CBDCs. Balancing innovation with financial stability and consumer protection is a global challenge. FATF guidelines. FATF sets global standards to combat money laundering and terrorist financing, extending to the crypto sector. Its recommendations include AML and KYC procedures for crypto exchanges to enhance transparency and prevent misuse. Collaboration among nations and adherence to these standards and guidelines are critical for the safety and integrity of digital financial transactions worldwide. Anti money laundering or AML and counterterrorism financing or CTF. Fintech platforms must adhere to international AML and CTF regulations to prevent illicit financial activities. Compliance involves robust customer due diligence, transaction monitoring, and reporting of suspicious activities. Key aspects include FATF guidelines. FATF sets global standards for AML and CTF, harmonizing international efforts to combat financial crimes. MLATs, that is, mutual legal assistance treaties, enable cross border cooperation in legal matters, including AML and CTF investigations. In essence, fintech law relies on international standards and cooperation, ensuring compliance with AML and CTF regulations and safeguarding platform integrity and security. Trade and investment. Trade agreements impact fintech services by influencing market access, data flows, and regulatory alignment. Investment treaties protect foreign investors, aiding fintech startups' global market access through investor protections, dispute resolution, and facilitating market entry. Regulatory harmonization promotes consistency, reduces compliance costs, and encourages cross border collaboration. International organizations like the IMF, World Bank, and WTO, along with bilateral and multilateral agreements, play roles in fintech regulation. They contribute to global best practices and regulatory sandboxes, fostering cooperation, innovation, and sustainable growth in the fintech industry. Consumer protection and dispute resolution. International law provides mechanisms for resolving services. Cross border dispute resolution. Methods such as mediation, ombudsman services, and online dispute resolution facilitate the resolution of disputes in cross border fintech transactions. Role of international arbitration. Arbitration clauses in fintech contracts supported by international arbitral institutions ensure neutral, private, and enforceable dispute resolution for complex cross border fintech disputes. These mechanisms collectively maintain fairness, trust, and effective resolution in the evolving fintech landscape. Global financial stability. The interconnectedness of fintech with traditional financial institutions means that the stability of the global financial system can be affected by developments in fintech. International law helps in coordinating efforts to safeguard financial stability, intellectual property, and innovation. International legal frameworks promote fintech innovation and collaboration by providing rules for global expansion and partnerships. Key elements include international patent and copyright protection. Fintech companies seek patent and copyright protection for innovations utilizing mechanisms like the PCT for patents and international treaties like the Berne Convention and TRIPS for copyright. Role of WIPO. The World Intellectual Property Organization, or WIPO, administers treaties, sets standards for copyright protection in digital environments, engages in policy development, and offers capacity building for fintech companies. Balancing innovation and IP rights. Strong IP protection incentivizes fintech innovation while balancing access, competition, and regulatory frameworks to ensure broader access to fintech solutions without stifling creativity. These elements collectively foster innovation and protect IP in the evolving fintech landscape. Challenges and future trends. International law is the foundation of the global fintech landscape, ensuring secure, ethical, and standardized cross border operations. It safeguards consumers' financial system integrity and fuels global innovation and economic growth. The evolving fintech landscape, driven by emerging technologies like AI, blockchain, and quantum computing, poses challenges in addressing regulatory gaps and inconsistencies, particularly in the context of cross border operations and consumer protection. International law plays a vital role in standardizing regulations, enhancing consumer trust, and fostering responsible fintech innovation, ensuring a balanced and innovative future for the industry. The evolving fintech landscape, regulatory challenges, and the role of international law are all key factors shaping the future of fintech. As fintech continues to evolve, addressing these challenges and harnessing the potential of emerging technologies responsibly will be critical to unlocking the industry's full potential. In conclusion, the rise of fintech in India is creating an evolving and dynamic regulatory framework. It seeks to strike a balance between fostering innovation and safeguarding the interests of consumers and the financial system. In fact, there is no dichotomy between innovation and the interest of customers. As India journeys further into the digital age, the evolution of fintech laws will remain a crucial aspect of its financial landscape. If you enjoyed this video, don't forget to hit the like button and subscribe for more such informative content. Thanks for watching, and we'll see you in the next video.